Ladies and gentlemen of the crypto space, we're live at 11:35 a.m. on a Tuesday, June 8th, and we have a lot to think about. We have hopefully no actions to take. We've been in these markets for a long time. Many of us have been in these markets for years. I myself, and some folks have just entered the space, and this is going to be a very difficult period of time for persons just entering the space. And frankly, persons just entering the space are perfectly well suited for the approach that I offer. Dollars, just work in dollars and figure out how to use DeFi with dollars. And there's yield that's going to significantly outperform anything that the legacy banking system will offer, probably ever. So, dollars are a great way to basically experience no depreciation and only capital gains. Um, Assets are an entire other story. They're volatile. They could significantly outperform markets. You could get tens and hundreds of multiples on your capital with assets, as we've experienced over the last pretty much March of last year. After the crash from the pandemic, markets just kept going up. DeFi summer. There was a little bit of time off between September and December, and frankly, January. And then markets just kept going basically until about 3, 4 weeks ago at this point, give or take, and started our topping patterns and into our depreciative cycle that we're currently in. So, point being, it's been a heck of a ride. And this is the place to be. This is the place for capital. The complexity is we need to know how to traverse these markets. And I myself feel comfortable with the way my capital is currently being deployed. You're going to watch your principal depreciate. And the contrarian way to look at that is that's not the issue. That's not an issue because these markets are different than they were historically. You're going to watch your principal go down, but I'll remind folks of my tweet the other day about the pizza shop. Just because the pizza shop becomes less valuable doesn't mean you sell your pizza shop. Stop focusing on the principal. The principal is what's irrelevant. What's pertinent is the revenue stream. Now, the vast majority of persons are allocating capital that is in excess to their overhead requirements. So that means your revenue stream, probably you're not drawing on it as your principal source of income, which means the whole focus of your revenue stream is to compound your principal. And your principal, you're looking at it in the dollar denomination, which is a red herring. More coin. If you're compounding your yield into more coin when markets turn around 10 years, it's not going to be 10 years. 5 years, it's not going to be 5 years. 1 year, it's probably not going to be 1 year. So when markets turn around, you have more coin. Got to look at these things differently, boys and girls, and find some confidence and conviction that most people are missing out. And that's unfortunate and that's tragic in many regards. And it makes me feel empathy because the volatility in the dollar denomination really throws people off. And they're missing out on a massive, massive opportunity. You know, as I watch charts just basically go down, down, and down. That's a blood red chart, but it is on the hourly. What really matters is the daily. And if you zoom out, I mean, come on, guys. I remember when this thing was crossing $1,000. This is an extraordinary price point, but the big picture is robust, powerful, meaningful, systemic, and it's time for the system to change, and it's time for our opportunities to change. And this is an extraordinary opportunity. Why can't I beat my telephone? That'd be nice. All right, let's get into the stream. Balance sheet on autopilot. Irrational markets take hold. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social good. Stop depositing on exchanges, not your keys, not your crypto, non-custodial DeFi, or nothing at all. Bam, let's pop it over to the main screen and see who's in the stream. Matthew's in the house. Let's bump these likes. 46 people in the stream, 12 likes. We can do better. Rodrigo, finally I catch a live stream. It's a pleasure. Thanks for having us. You're welcome, Matthew. Liv W. Hi, Noah. RJ. Hi, Noah. Wave Mappers, my man. DJ F. Hey, Noah. DeFi Trader, first time viewer, not going to be the last time because we got that content, boys and girls. Kenji, good morning, family. It's a pleasure. What's your current Convex finance strategy for maximizing yield on your capital? So CVX CRV, I think, is one of the most extraordinary yield producing opportunities I've ever seen. And the markets can depreciate all they want. This actually looks like a pretty bad inverse head and shoulders on the daily. Shoulder, left shoulder, head, right shoulder. This is a big head. This is like a multi-headed hydra. But it can do what it wants to do. And I'll watch curve go down. $1.90. I'll watch it get cut in half. What I care about is my daily revenue stream, and I have no interest in selling on the way down. What I want to do is buy on the way down. And I'll just keep buying, dollar cost averaging, and accumulating more coin. Sure, you can sell and wait for it to go down and rebuy to have more coin. Just depends how much time you want to spend on these markets. And personally, I don't have any time I want to spend on these markets. I want to be able to have my balance sheet on autopilot, working for me while I'm doing other things. So it's a very difficult thing to be able to separate yourself from the principal because we watch the dollar denominated value depreciate. But that is, I think, an important goal and an important pursuit, and something that cannot be taught, something that can be expressed, but something that takes really a fair amount of time to be able to achieve. It's something that it's a place of state that I am. The principles are relevant, and the yield is what matters. So I have cash on curve as well in the Aave pool. So I have cash that I'm capable of deploying. And at this point, I don't have interest in trying to outperform the market, asymmetrically appreciating assets. Be damned. My interest, pretty much for the vast majority of my portfolio, is the accumulation of as much curve as possible. What I saw in DeFi Summer 2020, whether it comes in DeFi Summer 2021 or inevitably at some point in the next couple of years, I want to capitalize on transaction fees, and I believe curve profit sharing is one of the most lucrative ways to capitalize on transaction fees in the crypto space. I believe Curve to be the forex of the crypto space. It just makes logical and rational sense to make that deduction. And that is the approach I'm taking for pretty much the vast majority of the portfolio. I have plenty of assets in the portfolio, but every single asset is working. Every single asset is generating returns, some more than others, but probably about 80% of the portfolio is dedicated to a curve position at this point. I have no more time waiting for assets to appreciate, and I sure as hell don't want to sit in volatile assets while they depreciate, unless they're producing a significant revenue stream. Um, let's keep it going. Sacramento, California, in the house, Robert. DJF, what's your favorite pizza topping, and why is it pepperoni? Not necessarily pepperoni. I'm a cheese pizza kind of guy. Frankly, I have an easy answer: anchovies. I'm straight about Italian. Like them anchovies, boys and girls. Matthew, more coin. That's the meta strat. So more coin's the deal. At least that's the way I think about what's important. Because over the years, over time, as these markets change and evolve, the people that have more coin are going to have more capital, more digital capital, more principal, more working capital to deploy to generate revenue. And that's my goal. I want more coin, not more dollars. The dollars I make from working. So go to work, pay your bills, and these are assets that carry your hopes and dreams in the future, and they should be working. You want these assets to work for you instead of you working for your money or your assets. So that's the difference between these markets now and years past. Adam, good day, Noah. Alpha City already the first in a few minutes. My man, I like the Alpha City. We can do better. We very much can do better. Mark, hi Noah. What would you consider to be a safe Aave health factor? I always operated probably, let's say, 2.25 plus. Safe and reasonable is probably 2.5 to 3. I always significantly over collateralized. I have no interest in ever experiencing a liquidation process, no matter what. Kyle, would you use Dex or Sex to on-ramp six-fig investment from bank account to MetaMask Poly? You can't use Dex, so I'm a fan of Gemini. So the Gemini is my fiat on and off ramp. Uh, that's how I do it. Drive. Sup, Noah? Recently found your channel. You've broken my brain and totally changed how I view the crypto markets. I have a ton of reading to do. Yes, reading and experience and tinkering and DeFi Dad is a great resource for tutorials, and Bankless HQ is a great resource for ideology. And obviously, my rhetoric and my topics and my stories are like Bankless HQ, but go a little bit further with my patented flavor. Ali, didn't I miss it this time? Welcome. I'm happy you didn't miss it this time. Sean, hey Sean, it's a pleasure. Hope all is well. Rodrigo, have you checked Anchor on Terra? Kind of aligns with your thoughts. Yes, but it's the seamless interoperability that throws me off. It's not directly integrated with Ethereum. And the capital flow is just not palatable to me. And I don't want to get paid to borrow, so something is unsettling about that reality. Um, to understand these systems, we have to understand status quo banking systems. And I would argue that while the legacy system is broken, it's functional. And the properties that we see in the DeFi space that make it special are analogous to that of legacy financial infrastructure. Uh, what makes DeFi further special is that while it's analogous to legacy financial infrastructure, it fixes the things that suck. It fixes the things that are broken. It fixes the things that are oppressive. Be the bank instead of providing liquidity to a bank. Can deploy dollars on an Aave, and if you get in 1% interest, you're outperforming every bank I've ever known. Have you looked into deducting DeFi loan interest as business expense? Sure, loan interest is expendable. Given that your business and management of capital acquire yield, deducting the cost of capital makes sense in theory. Of course, it does. A loan interest payments are deductible. But I taxes are annoying as all heck. And point being, if you could avoid taxes, the better. Finding deductibles typically causes underperformance, in my opinion. I prefer to avoid taxes rather than seek out additional deductions. And I also have no problem paying taxes. I will achieve more capital gains if I can and pay more taxes if I have to. I'm very interested in investing dollars as you speak, Dio. I have begun because I have fear I won't track my transactions correctly for the IRS. Yeah, but that's exactly why token tax exists, and there's plenty of tax software that will go into your Gemini account and process all your transaction history. So the you get a nice little comma separated value Excel spreadsheet of all your transactions. You put them into TurboDex, and you're done. DJF some. I was about to close the stream when you said plain cheese, but I can't argue against anchovies. Yeah, plain cheese and anchovies are. I don't like that fancy stuff necessarily, but something about anchovies is yum yum. Pellets is in the house. Always a pleasure. Cass Curve is the forex trading of crypto. Let's make the risky volatile even more risky. Let's make the risky volatile even more risky. Well, there's risk in everything. There's risk in stable coins. What I like to think about is that there's a guaranteed loss of value keeping cash in a bank account. I will take a risk any day to avoid a guaranteed loss of value. And I think that's very meaningful to consider. With regard to risk analysis, risk assessment of any protocol that we interact with. How could we sit by and let our capital just deteriorate, evaporate into nothing when we actually have a capacity to attempt to outperform debasement? We're forced to do something. We're forced to consider almost anything. And I would argue that the vast majority of us are in a state of financial desperation. They're taking our money every year. What are we working for if they're taking 15% of our money every year? Minus 15% in an average bank account. What a ridiculous reality. What are you going to buy bonds or stocks or mutual funds or ETFs when we know the legacy system is in massive spend wedges, massive rising wedges, poised to have a massive technical correction? I have no interest in deploying capital to such markets. Let's keep it going. Plate and cheese army, Rodrigo in the house. How much incentives and Curve going to put on Polygon Phantom? Unknown. We'll see what plays out. But I look forward to seeing Curve on Phantom as well as Curve on Polygon, and I think that's going to be very interesting. I like to see the cross chain solutions being implemented. I'm very excited for the Curve platform as it spreads across the DeFi space. Um, that might talk. He's probably talking about stablecoins, pellets. Crazy Yeti Phantom Network. It sure is fast and EVM compatible with Ethereum. Are we just waiting for a blue chip like Curve Ave more to it in order to boom on Arbitrum? It's going to delay its growth. I'm horrible at reading today, but with regard to Phantom, with regard to L2 EVM solutions, we're looking for critical mass liquidity. And that's the first step. And that's why Polygon did what it did. And that's why BSC did what it did. And that's why, I get the sense that Solana is going to do what it's going to do. And I think Phantom's going to do what it's going to do. And Avalanche as well. And there's probably other networks that I'm missing. And inevitably, at some time in the next 100,000 years, Cardano is going to come online. So that's exciting. I look forward to all of these networks becoming homogenous and seamless with interoperability solutions like the Ren Bridge. Um, and that's how this whole space is going to evolve. You really have to look at this market with a long time horizon lens. I have some equities. Folks know that I have my stocks with lithium, graphite, cobalt, and nickel in the uh, battery metals miners. I have a 5 to 10 year time horizon on those. I've watched them go up and down for years. Years. I'll do the same with crypto, except I expect it to be more volatile and more lucrative. And guess what? The dividends beat the shit out of anything in legacy finance. The dividends. More coin. More coin, damn it. Adam, the CVX. Well, Matthew, wish we could pay all our bills with stablecoins instead of depreciating fiat so we could get the nice interest. Screw the banks. I have the vast majority of my capital in crypto, and that's just the way it should be. It's the only way to operate nowadays. Adam, does CVX CRV produce the exact same yield as VE CRV? No, it more, much more, because it provides the same VE curve. So CVX CRV is tokenized VE CRV, but it's also a 10% revenue share of the Convex platform's curve emissions. So you're actually getting CRV emissions. So you get three emissions with a CVX CRV position. You get curve. You're literally getting curve in emissions form. You're getting three curve, which is the same emissions from your VE curve position, and you're getting incentivized CVX from their monetary policy. How can it have a one-to-one peg with curve, which hasn't been locked up? Sushi Swap has a CVX CRV pool. So the peg is maintained by a single uh, um, pool currently. There's some great ARB opportunities. So when I'm accumulating CVX CRV, I'm likely not locking my CRV. I'm more often swapping curve for CVX CRV because people are selling their CVX CRV for CRV. And I'm thinking to myself, yeah, I'm so going to take advantage of the other side of the trade. I've gotten 5% bonuses, 10% bonuses on my CVX CRV accumulation. I'm buying fear, and I'm getting a heck of a bonus doing it. I got another 300 grand to deploy over the next couple of months. This is going to be nice accumulation. Um, are you staking your CVX token emissions or selling for more curve? That is a good question. So, you know, obviously the curve is being locked as CVX CRV, and the three curve I'm just accumulating. It accumulates slow. Um, I'm currently accumulating CVX. If the yield on CVX exceeds that of CVX CRV, CVX is just going to go apeshit, and it's going to significantly and asymmetrically appreciate. So I'm accumulating a bit of a CVX position. Whether that is something that I will continue to do, I don't know. Logically, I want to accumulate curve, so maybe I'm just selling all my CVX for curve. So if I'm holding any of the emitted CVX, it's because I'm taking a risk position, thinking that it's going to asymmetrically appreciate. Well, in the process, it's producing like 60% yield right now, denominated in CVX CRV. That's a heck of a revenue share unto itself. The entire Convex platform is designed to boost and amplify the curve effect and the curve monetary policy. Fascinating. Um, Tao, are you worried about CVX CRV peg getting broken and curve mooning without it? No, because CVX CRV is CRV. And if the peg is broken, I'm going to swap curve more CVX CRV and I'm going to get bonus. So CVX CRV behaves identically to VE-CRV. If you're worried about curve mooning, the same thing happens with VE-CRV. You can't sell your VE-CRV. And if anyone is thinking about selling VE-CRV, I think is missing the point of the profound uh, offering it means to own a part of the Curve platform's revenue, of their transaction fees. You're literally just betting if it's going to be a significant piece of financial infrastructure. And what do we know now? It's currently a significant piece of financial infrastructure. It has more stablecoins than most centralized exchanges, and the numbers are going up. If it's already a critical piece of systemic infrastructure, it has network effect and it will remain a critical piece of systemic infrastructure. So now you're speculating on what the entire crypto space may be like in the coming years. I mean, man, if the Curve platform does 100x on transaction fees, I don't care about the price of Curve. You see what I'm saying? Red herrings. The price of Curve, the dollar denominated value. If I am I will write off everything I've made and say I have $0, but I own 0.1%, 0.5%, 1% of Curve's revenue. Probably own about probably at 0.2, 0.3, 0.5. I might own 0.5% of all of CVX or all of VE Curve locked vis-a-vis CVX CRV. I own a significant percent of all of Curve's transaction revenue. Extraordinary. Kenji. More coin. I don't mean to bash on Cardano. They just have a lot of catching up to do, which is extraordinary because they're so old. It's been 5 years. Would you say there's an opportunity cost to holding those commodities or just trying to reduce overall portfolio volatility? My commodities? Well, it's not commodities, they're miners. So I think, yes, there's a significant opportunity cost, but I want exposure to it because that's how I originally got into investing is the battery metal miners. I've been in battery metal since 2017, maybe even 2016. This was pre-Tesla story and pre anything exciting about Tesla. So this is a long-running narrative I've had. Seems we are turning bearish for some time. Yeah, the markets have been bearish for a bit, but it's okay. We'll traverse these markets as best possible. Cass, damn, you make my head spin. I want a piece of this action, but still trying to figure out where to start. One step at a time, ask questions, pop questions on Twitter, jump on our Discord forum, and we're more than happy to converse all the time, any time of day, 24 hours a day. I myself am basically just hovering in that Discord forum, and we have a good time in there. It's the place to be. Wonderful group of people that has grouped together in a short period of time. I really value and appreciate everyone that's in there with me every day. We're truly rational, and we're looking at the markets as a vehicle to traverse a landscape that's novel and uncharted, and we're doing it together. So that's it's kind of like a little family. It's nice. It's very comforting, honestly. Um, Any guesstimate of what sort of volume you think Curve can have in 5 to 10 years? Yeah, come on. Isn't 100x obviously in the cards? We're not talking about 100x on the price of Curve. We're not talking about 100x on the price of Bitcoin. We're not talking about 100x on the price of Ethereum. We're talking about transactions of stablecoins that we could own a percent of the transaction fees. That's a heck of a dividend. That's like that is such an incredible dividend compared to REITs, compared to preferred stock. Owning transaction fees from a dollar stablecoin forex market. That's the way I like to describe it. You're literally exchanging dollar or digital fiat currencies in many regards. Extraordinary. Um, is there the best place to learn more about specifics of curve functionality? Um, Not necessarily. Just DeFi Dad will help. Our Discord forum will help. And you really first need to figure out the questions to ask. Ask the questions, and we'll be able to provide answers. Hey, I just made the deposit on Aave last week and doing DeFi on Sushi Swap. I like Curve, but should I start with Convex? Curve user interface not embracing. What's your thoughts on Curve versus Convex? Curve amplifies the crap out of Convex amplifies the crap out of Curve in an extraordinary way because you need a significant amount of VE Curve to achieve max boost on Curve directly. Um, and the emissions are in you'll get your Curve incentivized emissions from their monetary policy, but you're going to get significantly more returns vis-a-vis Convex. And your earned finance is obviously always something to consider. Those boys are absolutely incredible. Um, Matthew, dang, if you can own 1% of all Curve fees, that's quite the revenue stream. Extraordinary. Cass, let me get you a Discord link. Profile. It's in my Twitter profile. Here it is. Boop. There you go, guys. A nail. There you go, my man. Cass, heck of a dividend. Understatement of the year. It's a dividend. We're talking about dividends. We're talking about digital fiat currencies. We're talking about monetary velocity, inflation, and deflation. We're talking about everything that we talk about. We're talking about a financial system. And now we have multiple financial systems. You have Ethereum L1. You have Binance Smart Chain. You have Polygon. You have Phantom. You have Avalanche. You have Solana. These are financial systems because they have properties of financial systems. And these are protocols and currencies because they have properties of currencies. They have monetary velocity because they can be lent and borrowed, which creates money according to double entry accounting bookkeeping principles. It's the same way we look at legacy finance. Adam, hope this doesn't come across as rude or probably worth it, but why charge $10 a week in Discord if everyone's helping everyone? Because I need to make a buck and I'm tired of working. And that is exactly why it's $10, my friend. We help each other, but I need to make a change in my life. And this is a path that I've done for a long time. Um, so not all about money, ladies and gentlemen. It is a good part altruism on my part, and that's why I started everything on Twitter. And notice that the YouTube doesn't even have ads anymore. But there's no logical reason for myself not to capitalize a little bit. Logically speaking, $10 ensures commitment, meaning nobody's going to spend money if they're not going to extend effort. And that ensures that proper due diligence is executed and questions are asked. If something is free, it tends to be underconsumed or underappreciated or even exploited. The most important thing, and this is probably a nice effect of the small amount of capital required to be in the forum, is if it was free, it would be a freaking mess. Meaning that's how you get moon boys and people that are really not in it for the right reason. So obviously, $10 is a small amount of capital, um, and it helps regulate the conversation, the tone of the conversation, the quality of the conversation, and true. It's for myself to capitalize. That's not something I will ever beat around the bush. It's not incredibly lucrative. It doesn't replace my job. But considering the content that I put out on Twitter, the content that I put out on YouTube, and the services on Discord, I would like that to be my job. And right now, it can't be. I would love to dedicate myself to Twitter and all this wonderful content that's produced, and all these thoughts, and all these ideas on how to do things better and do things differently. That was a dream. It really is. I'm tired of work. I'm tired of waking up and having to do work for other companies so they can make money. I'm tired of the way I used to make my gains. The last 11 years, I've been a software engineer, um, and it's exhausting dealing with all these corporations. Um, you know, they all have their motivations. They all have their own interests. You're dealing with managers and the human resources that all individually have their own interests. It's exhausting dealing with human beings that don't have the same interests as you. So you're dealing with a manager that wants you to do something very specific. I'm digressing significantly right now, but and you don't want to do it, but it's your manager, so you have to do it. But when we're engaging in the conversations that we have either on YouTube or Discord, we all want to be there, and that's just a wonderful experience. So if I could replace my revenue stream from such a source where I actually enjoy, where I allocate my time, you guys got to realize that that's a dream. Um, that's a good point, Cass. I should put the Discord link in my YouTube, but it's on Twitter. I could do better. I could do better. We could always do better. I get off this call and I got to jump on another call. I got to jump on another call. I got stuff going on all over the place. I swear to God, I don't know how to express it to everyone, but to simply put, sometimes I feel like crying with the amount of responsibility I have on my shoulders and the amount of effort I put in. I'm not sitting here all day on Twitter. I have a lot of work for a lot of companies, and it's very overwhelming at times. And I seriously crave an opportunity to be able to actually do what I enjoy doing. I got to wrap this up soon, but let me hit everyone's comments. Daniel, I'm 35 and I took the contrarian approach in this market. On my balance sheet, I'm holding no cash. I'm getting punished for it. Is your balance sheet all ETH or cash? My balance sheet is actually CVX CRV, probably about 18% cash. And a bunch of other stuff. Everything is generating revenue. I would not have all Ethereum at this point. I have my Ethereum position. It's probably about 6% of the portfolio. Bitcoin's even less. I have 1 Bitcoin. I don't think that's the best allocation of capital. I think there's a lot of opportunity cost over applying capital, especially to Bitcoin, but to Ethereum. At least the logic is, what is a node going to be? Maybe 32 Ethereum is going to be everything in the future. Deflationary pressures and a source of revenue. Maybe it is an entire business operation, just like a RenVM node. So I think that was my logic for having a cap at 32 Ethereum. So that's where I'm at, 32. You have to have spending cash on the side for your DeFi transactions. Um, but excess Ethereum or excess anything at this point is going to be capital destructive. Plus, Ethereum doesn't work well. It doesn't do much. What are you going to get 6% on your Ethereum? 10, 12, 15% if you're taking on the a convex position. Um, Whereas you're getting 120% on CVX CRV. So there's a lot of opportunity cost with holding Ethereum. So that's just my sentiment at the moment. Adam, absolutely fair enough. You share a heck of a lot for free and zero disrespect, man. I'm just not earning at the moment, building my own startup and living off savings, so being extra frugal. Yeah, my man, it's all good. It's all good. That's why I have the YouTube streams every day, and I'm always on Twitter. Ping me on Twitter. I'm always happy to help the best I can. And believe me, I talk to everyone. Some folks try and talk to me with my office hours, and if someone said they just don't have the cash, you think I'm going to say no? You think I'm not going to respond in Twitter messages? Of course I am. So that's just, this is the path. This is my path. I'm going to help people. That's what I want to do. That's what I want to be. That's my purpose. People can do better, and we can do better. We don't have to go through our day frustrated, not understanding the systems we interact with, the amount of oppressive control that's imparted on us, the notion that we're going through our day in a system that's crafted. The entire system is crafted like a rat in a maze. Our entire system is a system of control. And that's what I like to talk about. And the better we understand the system of control, the better we could traverse these markets and do well for ourselves and our family. Anyway, getting a little emotional here. Dawkins say we can do better. We can do better. 94 people in the stream, 38 likes. We can do better. Matthew, if I want something extra, we should pay for it. Getting things for free is the Google way of thinking, and that era is at an end. Some people do the ads on YouTube, and no, 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 I'm not going to do that shit. Adam, hopefully I'll be joining at some point soon. Keep going for the dream. Thank you. I will not stop. My wife and my oldest daughter are relentless. This is what I do, and this is what I will do. Armstead, thank you very much. Webby, thoughts on being an LP on sushi for CVX? That sounds very nice. I think there's opportunity cost. I think it's more lucrative to just lock CVX CRV, so you get the 10% platform revenue share as well as the incentivized CVX emissions from their monetary policy. So there's no reason not to discount such a LP position. I just think there's opportunity cost. Cass, you're paying it forward big time with these free streams. See you in the Discord, methinks. Take your time. You don't have to join. I mean, I know $10 a week, $40 a month. I know. I know what minimum wage is. Everything I did started with pizza delivery back in the day. So I know. I know, guys. But we can do better. And $10 an hour should be trivial. We should be able to make 50. We should be able to make money hourly, constantly, predictably. If we understand these systems well enough, we should be able to crush these markets. Complicated topic, but we deserve to win, and we can. We just have to keep talking. How do you even do this full time while having a job? It's not possible. This is all part time. I get on Twitter as much as I can, and I talk on the YouTube for a half an hour a day. And obviously, I digress. Today's 45 minutes. Know with this amazing appreciation of your assets and risk-off yield-bearing approach you have to the markets, why can't you already quit your job and enjoy your DeFi retirement? I need to make $8,000 a month to cover my overhead. Um, that's a lot. And even if I could make 8,000 a month in the crypto space, I'd rather compound it such that when I'm 38, such that when I'm 40, 42, I'm not making 8,000 a month. Maybe I'm making 15,000, 20,000 a month. So overhead and capital management. And while I'm young, I might as well work also. So there's a lot of crossroads that I'm at because I am burnt out and overworked and exhausted. So that is something to consider. RJ. Can't just quit. Lyle, seriously, no, you're adding so much value to the space. Thank you. Side question: do you see any value in taking a position in Stellar? Not at this moment. I don't have any interest. Jan, I'm a bit surprised that you still need to work. Seems like you made a lot of money in crypto. Aren't the yields enough to ditch the job? So technically, yes, but I have to account for capital gains. I have to pay taxes and also additional revenue streams, and risk management means multiple revenue streams reduces risk, multiple sources of income. And I'm young, and I cannot justify not working yet. For instance, if the Discord server went 10 times the amount of users, yeah, then I could stop working. But it's not there. It's not there. Um, Adam, people can do better. Captain Rational is a rational optimist. The only way to be. Oh, rational optimist. Absolutely. Balancer, big deal. The AMMs are awesome. Quite lucrative, such positions. I think there's opportunity cost. And you guys know why I see opportunity cost, because listen, I don't. You never go all in, never spread too thin. That's the ideology I've talked about for a long time now, and I am not all in. But I that says nothing to having an oversized position and allocating an excessive amount of capital to one, two, maybe three positions, of which that is the case currently for myself. Warren Buffett does not diversify extensively, and I think that is the approach that is logical, and that is what I am enacting. Prefer insurance provider. There's only one. It's Nexus Mutual. You can also get from ArmorFi as you see fit. Stacking. No, a great stream. Been following since almost the beginning. I think a great addition to the stream would be a focus on after-tax return strategies. Yeah, taxes are a hot mess, and I'm sure not an accountant, and that is not the easiest topic to navigate. But yeah, I've been contemplating that corporate structure, but if there's no tax benefit to it, that's just a waste of time and effort on my part. Advice to someone who's in their early 20s: work, save your cash, put your cash on Aave. Once you understand Aave, figure out how to put your cash on Curve. Once you understand Curve, figure out how to put your cash on Convex. And understand the Yearn platform and explore the DeFi space. Take 20, 30, 40, $50 and experiment. Once you see the cash rolling in from Yearn, the real time interest rates, you'll just realize that there's logically no reason to deploy capital to a bank account. You're a liquidity provider to a bank account, and they're making your money. They're making their money. If you're a liquidity provider to Aave, it's a bank, but you're making the money. So focus on dollars first. Dollars is the gateway, it's the entrance to understanding crypto. If you can't manage cash, you're not going to be able to handle these assets, especially the volatility of them, which are through the roof. Yeah, thanks for answering. Appreciate everything you do. Your way of thinking really resonates with me. I hope it helps. I really do, because there's too many folks buying Dogecoin and Shiba Crapu and cum rockets. What the heck is the matter with these human beings? They have no sense of financial fiduciary responsibility. These systems are very complicated for a newbie to get started, but you are wonderful. One step at a time. One step at a time. Take less risk. If you have uncertainty and don't know what you're buying, don't buy it. Dollars, 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 stablecoins, stablecoins, 20%, 30% yield is possible on using Curve, Convex, and Yearn on dollars. And you don't even have to take the risk of watching Ethereum go from whatever it is right now, $2,400. If it crashes down to $2,000 or $1,000, you lose 50% of your money. A good goal is to have 32 ETH, but that's a heck of an achievement. It's probably like 80 grand right about now. So DCA, dollar cost average, and I would say probably one Bitcoin's a nice achievement, but that's more of a trophy at this point rather than a functional use case, because 32 ETH will allow you to have a node, which means you can have potentially a significant source of revenue in the coming years, speculatively, but logically as well. DJ Epsom, I appreciate you too. I do. Where do you see DAOs in 10 years? Unknown Too far out, too speculative. Is Convex team anonymous? Unknown. What I know is at least they're supported by Curve, and their user interface is breathtaking, functional, reliable, stable. You don't just build something out of nothing. We've seen and we know what high risk DeFi platforms are like. We see the user interface presentation. We see the social media interaction. We see the capital allocation. You know, Convex has like $3 billion in capital in like 3 weeks. Gut says they're probably related to the Curve team in most regards. Curve is like a turbo. Convex is a turbocharger for Curve. I've never seen anything like this. I'm playing a crypto hardcore mode, CRV, 4 years locked. Boom. Kenji, cummies. Can you believe these people? Can you believe someone thought it was a good idea to buy cum rockets? And then they wonder why 75% of their money evaporated like a fart in the wind. DO, is investing in dollars in BlockFi a mistake? No, it's fine. BlockFi and Celsius are fine. Um, Probably just opportunity cost, meaning you can do better. Um, so I really appreciate BlockFi and Celsius because most people can't. And that's going to be a critical piece of infrastructure. Um, Man, if this gets above the 382, I'm going to be quite happy to see it. If this wicks below and holds support in 7 hours on the daily above the 382 fib retrace, that's going to be nice to see. Reassuring and refreshing to see because it's a higher low. And you can easily start to see a even larger trend formation play out. I'd love to see a hold above the 382. I'm going to wrap this up. Hi, Noah. First time in the stream. Wanted to thank you for your fantastic content. We'll try to be more vocal, ask questions in future streams. The only way to do better is not to just do what people say. Don't do what I say. Hear what I say and ask questions and do things based on your conclusions, based on how I answer your questions and your conclusions on the conversation. That's why it's so disturbing what other crypto YouTubers present. They're providing instructions and not a capacity to think critically. That's dangerous. I would argue a lot of crypto YouTubers are straight up dangerous. And that's a shame. People should be ashamed of that behavior. They're capitalizing on people, and at least they should provide sound, logical, rational advice. But all they're providing is entertainment. But the entertainment is not going to serve the consumer well. BitBoy, Bitcoin to the moon. Anyone with those stupid headlines is a disservice to the community. True disservice. Tragedy in some regards, and they're making an absolute fortune. Anyway, I'm going to wrap this up. I really appreciate it, guys. I'm over today. All I really want to do is help the best I can because we can do better. And I've been through what every one of you is going through or will go through. Been in this a long time. And I'm a contrarian thinker. And I will attack these markets like no other person. I will do what other people won't. And that's what I like to discuss because we know the vast majority do not succeed, and I have all intent and purpose to succeed. 104 people in the stream, 53 likes. We're doing pretty good. We could still do better. Kenji, good boy. Last question before we leave for the day. 32 ETH as a goal for ETH 2.0 node. Would you rather accumulate CVX CRV for Convex or 32 ETH? I cannot answer that question. Because I could have both. I know you're probably thinking for yourself. Of course, you're thinking for yourself. That's a very hard question, and it's not for me to give an answer. It's for me to discuss the value in positions. 32 ETH speculatively has immense potential as owning a piece of Ethereum L1 infrastructure, speculatively. Owning a piece of Curve transaction fee revenue is an extraordinary reality as well. If you have to choose one or the other. Don't meet halfway. Don't go halfway, because if you have dollar cost average into Ethereum, but you need to reach a goal, meaning you need to either have a significant amount of ownership of the Curve platform or a 32 uh, count on ETH for a node in the coming years. It's not an easy question, and it's not an easy answer, and it's not an easy achievement. Um, so we'll be here, and if we let us know. Let us know if you get to something that's monumental, an extraordinary success, and we'll all be proud of you. Any regret not buying some meme coins? In retrospect, it was the easiest play ever to capitalize on. Doge outperformed Bitcoin over the last 7 years. No, I have no regret in not buying them because I have my soul, and I decided to not rip it out through my ass and shit on it. Okay, that was bad. Delete that. Thank you, Adam. You have a good one. Lito, thanks for the stream. Matthew, you're wonderful. Keep it up. Do better. We can all we'll all help each other. Sonny, you are late, my man. Roll back the stream, watch it over, and I will see you tomorrow, my friend. Adam, CVX CRV verse 32F. ETH option requires more capital, but Curve is reliant on ETH. If ETH fails, so does Curve. I think something to think about. It is not an easy thought process, and there's a lot of considerations, and it's a never-ending conversation that we have with ourselves, which we will continue to have on the stream. June 8th, 12:26 p.m. As always, thank everyone for joining. Tell everyone to subscribe, and I will see everyone tomorrow. Peace.